I'm Roger Montgomery from Montgomery Investment Management, and welcome to this end of financial year update for the Montgomery Fund. During the 2021 calendar year, the fund produced both strong absolute performance and strong relative performance. But of course, everything changed in the first half of this year with war in Ukraine, lockdowns in China, and more recently, concerns about both stagflation and even recession, making the investment climate a tough one to navigate. Of course, as history demonstrates, this too will pass. Joining me to discuss the fund's performance and the market more generally is Joe Kim from the Montgomery Fund. Thanks for joining me, Joe.
Thanks, Rog.
So, Joe, I mentioned that the global market sell-off has been a tough one to navigate, and it's been particularly challenging for any investor who focuses on quality, as we do. Could you perhaps shine a light on the reasons for the recent underperformance?
Well, Rog, you nailed it. Now, the fund, as you know, has a quality and growth focus, and we were overweight those sectors relative to the benchmark going into 2022. Now, we also have a valuation overlay. Now, what that means is we felt the earnings growth in the businesses that we own would be enough to offset the inflationary pressures and the downward valuation pressure as a result of rising interest rates. Now, what we learned was that the stocks that we owned were more interest rate sensitive than we had anticipated in January. Now, the second part of this is the war in Ukraine. And so for TMF, as we mentioned in February, the war was not in our base case. Now, what that actually has resulted in is a much more persistent inflationary pressure as global economies focus on energy security and food supply security. And so the inflation signal has been more persistent, which has obviously impacted the outlook for earnings growth as well as interest rates, and that has had a negative impact on TMF's relative performance.
Joe, investors like to know that we're not going to repeat mistakes of the past. What have been some of the lessons that you've learnt?
Well, Rog, there are two major lessons that I've learnt when I review TMF's performance over the past 6 months. Now, the first one is how quickly markets will change to a shift in sentiment. And if you go back and look at sort of calendar year 21, and even though we felt that sort of risks were rising with interest rates and inflation narratives, the market generally ignored them into December and then sold off very aggressively in January. And so that did catch me by surprise, just how quickly stocks sold off. Now, the second lesson that I've learned is when you anticipate a potential shift in the narrative and the sentiment, to go aggressive. And so one of the things, especially in volatile markets, because one of the things I've looked at is there have been some sentiment shifts that we were anticipating, but we didn't reflect portfolio positioning as aggressively as we should with the benefit of hindsight. And now that's been very punishing because the feedback loop on share prices has been very, very quick this year.
Joe, during periods of extreme volatility, one of the things clients want to know and investors want to know is that their capital is safe. Thinking about our investment philosophy, the portfolio construction process and stock selection, what are the reasons to be optimistic and reassured about investing with the Montgomery Fund?
Well, Rog, it's a very good question. As you know, the fund has a quality focus with a valuation overlay. Now, what that means is that we look at a few things when we assess an investment. So the first one is business quality, and that generally includes the Porter's 5 forces in terms of their competitive positioning and the industry structure. We also look at things like earnings quality, which I think in this environment is extremely important, and that's cash-backed earnings. We don't just look at the P&L, we look at the cash flow. The third thing that we look at is also the health of the balance sheet. So do these companies have a very sound balance sheet? And that's really important when interest rates are rising because that obviously has an impact on earnings going forward. And the fourth thing we look at is the quality of the management team. And does this management team have experience in navigating extremely challenging conditions as well as cyclical slowdowns? So those are the 4 things that we look at when we assess business quality, and it gives us comfort that all our investments have multiple factors when we make these decisions. So Rog, on top of the business quality, we also have a valuation overlay. Now, what that means is that the share prices that we pay that we believe justify the earnings outlook over a medium-term profile. And so when we look at share prices today, yes, they do reflect uncertainty and a period of economic slowdown, but we're very comfortable that the businesses are well positioned to benefit from the economic recovery, which may be 2-3 years away.
Joe, market returns for 22 have been the worst since 2008 when the market fell 41%, which sounds horrific, but we know the market subsequently recovered. It'll recover again eventually. Of course, we don't know when, but there must be a company that you'd like to call out as one that you're optimistic about.
Yes, Rog, and I've spoken about this company in the past, and it's ResMed. So we bought into ResMed back in June last year on the news of a competitor recall, a major recall, which basically provided ResMed with an opportunity to gain long-term market share. Now, the company has struggled to gain that market share because it's had supply chain difficulties, specifically in some communication chips. One of the things that came out in the most recent quarterly is that the company, we know that companies evolve and look to address, challenges that they encounter, and they've introduced a new device which includes a card-to-cloud chip, which actually circumvents the need for, a communication chip, and that's actually helped ResMed take some of the, the market opportunity. And then we feel like the longer-term earnings growth profile will benefit as the more devices you sell, the more masks you sell. And there's a long-term tailwind for this business, frankly, in a period of in market conditions where there's unlimited demand. And so that's one company that we feel very positive on over the next 2 to 3 years.
Terrific, Joe. Well, thanks for sharing that. That's all we have time for today. You may have some more questions for Joe and the team or myself about the Montgomery Fund. And if you do, please give us a call or send those questions through via email. We look forward to talking with you again soon.